Welcome back for my final daily report market video with me, Richard Perry, market analyst at Hantec, on Wednesday the 8th of May, looking at this rebound on dollar, which in the last few sessions has just been edging higher. I would say, I might be a bit premature in saying this, but I think this is a bit of a disappointing rally. I don't think it's a great move considering the fact that the markets have turned quite considerably risk negative. You've not really seen gold picking up in any real fashion. There's a bit of an unwinding move. You've got RSI above 50, with MACD lines just edging higher. Stochastics are the main improvement, but you've got this move that continues to look like it's just an unwind within this downtrend. That downtrend comes in 1291 at the moment. 1289 is this reaction high, which is also a basis of an old pivot as well. 1289 resistance is yet to really be taken out, and you could argue on the hourly chart here the market's basically trading in a range towards the top of the range, undoubtedly, but still a range. 1278 is a pivot within that range, again not to the absolute tick, but 1278 very much a basis of support at the moment within this range, and there is a positive bias within the range. RSI above 40 consistently, pushing 70, MACD lines above neutral, so you can say that there is a positive bias, and that is fair with the recovery that we've seen in the last few days. But is it a recovery that's just going to falter is my question, because you've got the downtrend, you've got the overhead resistance of the long-term pivot 1300 to 1310. I would just look at this and think, well, I don't think it's a move that's going to be lasting all that much further. The only caveat to that would be a complete blow-up of the US-China trade talks, and that would likely to still see gold higher. But within that, you're also likely to see a stronger dollar. So it's interesting sort of dilemma that gold traders would face in that environment. But at the moment, you're seeing the market edging higher, possibly because it's just possibly seen as a negotiating tactic from the US rather than anything substantial. But at the moment there is an edge higher on gold, and if it is a negotiating tactic, then gold will certainly weaken again, and the outlook will sort of turn negative again for 1266. But for now the market is edging higher. 1289 is the resistance, 1291 the downtrend, also then 1300 to 1310 the long-term pivot bands. I wish you good luck in trading today, and I will speak to you again soon.